Hello guys, this is fairbinaryoptions.com. So let's write on the screen that this is fairbinaryoptions.com. And today's analysis is about the euro and Great Britain pound, as the market is forming an interesting triangle and an interesting, let's say, in an interesting situation. Why interesting situation? Because it seems that this triangle looks like a wedge, and like any triangle that looks like a wedge, like a rising wedge, or not triangle. Let's say when the market is forming a rising wedge, then people have the tendency to sell or to go on the short side, which is alright. I mean, you should look for a rising wedge to break to the downside because it is a reversal pattern. However, there are situations when rising wedges actually break the other way, or when wedges break the other way, and this one, from my point of view, it already broke the other way around to the upside. So the path of least resistance here would be to buy call options or to stay long than going short. What is the pattern here? Well, the pattern is being called a running variation of a contracting triangle, and it goes like this. It goes with a move to the upside, and then market going like this: A, B to make a new high, C, D to make a new high, and then of course an E wave, and then to break higher. And like any contracting triangle, it should travel within the A and C trend lines, and B and D, of course, and B and D. And this is the pattern that market is forming here as well. Now, even though this is a 1 hour chart, we need to have end of week expiration date, because this one is both a continuation and a reversal pattern. The continuation pattern means that on short term we need to go for the thrust of the triangle, and the reversal pattern means that by the time the thrust of the triangle comes, we should go and short the pair or buy put options. In our situation, the previous trend goes from here, from the downside, as you can see, from this double bottom, and the market moves to the upside here, and then the triangle starts, and then we have wave A, the B wave, the C wave, the D wave, the E wave to the downside here, and now it should break higher. I mean, it broke higher, but it should break even higher than that. So the A and C trend lines will be this one, this will be the B to D trend line, this would be the A and C trend line, like this. So A, B, C, D, E, and breaking high. It is reversing a bit now, but I would say it is still worth the chance for looking at buying call options with, again, end of week expiration on the pair. Let's write here on the screen the plan for this running variation of a contracting triangle is being said. So buying call options with end of week expiration date is the thing to do on the euro and Great Britain pound, as this market here is fishy for short term. So we need to have an expiration date that should stretch a bit more than just end of day, so end of week. Now, it doesn't mean that we are actually going to wait for 1 week for the option to expire in the money or not, because this is Wednesday and in 2 days we'll have the expiration date. But also take into account the fact that the FOMC, or the Federal Open Market Committee, minutes are going to be released in this upcoming Asian session, and those one are going to be interesting to see, as we would like to see what the Fed discussed on the previous session. Thank you very much for being here. fairbinaryoptions.com. Bye bye.